Imagine giving a private company, like, the exclusive right to print monopoly money.
Right.
But they force you to pay actual real-world interest on every single fake bill they print.
Right.
And if you can't pay the compounding interest, they just, they get to seize your actual physical house.
Yeah, which sounds completely absurd.
It's totally absurd. But that scenario is actually how our global economy operates. I mean, if you read Stephen Mitford Goodson's book, you are just slammed with this mind-bending premise that this exact dynamic is the secret cause behind, well, virtually every major war, economic collapse, and political assassination in human history.
It is an incredibly jarring lens to view history through because, we're conditioned to see the timeline of human events as this series of ideological struggles, right? Like capitalism versus communism or democracy versus fascism.
Yeah, the stuff you learn in high school?
Exactly. But Goodson strips all of that away. He basically argues that those ideological battles are just a smokescreen. The only real dividing line in history, according to this text, is the battle between state banking and private central banking.
State banking meaning a government issues its own money, completely debt-free.
Yes.
And private central banking meaning a private cartel creates the money out of thin air, loans it to the government, and then taxes the public to pay the interest.
That is the core mechanism, yeah. Goodson synthesizes, thousands of years of economic data to make this singular sweeping claim. He says, whenever a nation breaks free of this interest-bearing debt trap—
what historically was called usury. Right?
Exactly, usury. Whenever they break free and simply print their own debt-free currency based on actual productive capacity, that nation experiences massive, unprecedented prosperity.
It just booms.
It booms. And predictably, according to Goodson, whenever that happens, the private banking syndicate orchestrates an economic crash, an assassination, or a full-scale war to crush them.
Just to force them back into the debt system.
Yeah.
I want to look at how he traces this back because, he doesn't just start with Wall Street. He takes this all the way back to the very foundation of Western civilization, ancient Rome.
Right.
And the detail that caught me completely off guard was the early Roman Republic. They didn't use gold or silver as money. They used chunks of copper and bronze called zigis graves.
Which is brilliant in its simplicity, honestly. During that early period, roughly 753 to 267 BC Rome was an absolute economic powerhouse. And it basically functioned on an early form of fiat money.
But wait, explain how copper works as an economy because, if it doesn't have the intrinsic scarcity of gold?
Couldn't anyone just find copper and be rich?
Yeah.
Well, because it wasn't about the metal itself. It was backed by the absolute law of the state.
Right.
The Roman government controlled the supply of these copper chunks, carefully expanding the money supply strictly in tandem with population growth and trade volume. They didn't borrow it from anyone, and they didn't pay interest on it. Because the money supply was stable and debt-free, Goodson points out there was effectively zero inflation.
Wow. Yeah. Free Roman farmers thrived. You had a highly functional, prosperous society without a parasitic financial class.
So what breaks the system? Because obviously Rome doesn't say that way. We know how it ends.
Right. The turning point is 267 BC, when the patrician elite, the ultra-wealthy of the time, secure the privilege to start minting silver coins, the denarii.
And simply switching the metal ruins the entire economy.
It's not just the metal, it's who controls it and how it behaves. Silver is scarce. When you tie your money supply to a scarce commodity that only the elite can acquire and mint, you hand over control of the economy to a private oligarchy.
Oh, I see.
Yeah, they engaged in seigniorage, meaning they basically pocketed the difference between the face value of the silver coin and its actual production cost. Suddenly, money isn't a neutral tool for trade anymore.
It becomes a weapon.
Right. It's an instrument for extracting wealth. The money supply shrinks, the free Roman farmers fall into compounding debt, their farms are seized and turned into massive slave estates.
A lot of fundia. Exactly. And those same displaced farmers are drafted into the Roman legions to go conquer more foreign territory just to find more silver to feed the system.
You essentially have a society mathematically designed to consume itself.
Yes.
And when it finally reaches a boiling point, who steps into the chaos? Julius Caesar.
Right.
The book points out that when Caesar takes power, he steps into a complete nightmare. You've got 300,000 citizens starving in the streets, and these private moneylenders are charging up to 48% interest.
It was an entirely parasitic economy, so Caesar implements this emergency financial restructuring. He strips the minting privilege away from the aristocrats and transfers control of the money supply back to the state.
Which is huge.
Massive. He issues cheap metal coins to flood the market with liquidity and get trade moving again. He aggressively caps interest rates at 1% a month, but his most significant reform was implementing the in duplum rule.
Okay, explain how in duplum actually works mechanically, because this feels like something we desperately need today.
It really is. It's basically a mathematical hard stop on debt slavery. The rule dictates that the total interest charged on a loan can never, under any circumstances, exceed the original principal amount.
So if you borrow 100 denarii?
The absolute maximum you can ever pay back in interest is another 100. Once you hit that cap, the interest just stops accumulating. It legally destroys the concept of endless compounding debt.
Which is great for the starving citizens, but it must have been catastrophic for the passive income of the ultra-rich patrician moneylenders.
Oh, entirely.
Wait, so are we actually saying Caesar wasn't stabbed 23 times on the Senate floor because he was a dictator who crossed the Rubicon, but because he was regulating the banking sector?
That is Goodson's explicit thesis. A dishonest financial system inevitably destroys the society, and Caesar was assassinated by the aristocrats purely because his monetary reforms threatened their parasitic livelihood.
Yeah.
He understood that money should be a sovereign agent, created by law for the benefit of the public, not hoarded by speculators to cause panics.
If that kind of economic assassination happened in Rome, how did any society ever manage to break free from it? Because Goodson claims there are periods where humanity actually lived outside this trap.
There are.
And the example he gives in medieval England completely shattered my understanding of the Middle Ages, the tally stick system.
The tally stick era is, it's one of the most remarkable and honestly heavily suppressed periods in economic history.
We were talking about literal wooden sticks.
Yeah.
The state used split pieces of wood to run an entire national economy.
Yeah.
How did that even function without being massively counterfeited?
So they used hazel or willow wood. The king's exchequer would carve notches into the stick to indicate the denomination of the money. Like a cut the width of a thumb meant 100 pounds.
Okay.
A cut the width of a barley corn meant a shilling. Then they split the stick perfectly down the middle. The exchequer kept one half, and the citizen took the other half into the economy to spend.
And how did that stop forgery?
Because the grain of every piece of wood is uniquely irregular. It was physically impossible to forge a match. If you put the two halves back together, they had to interlock perfectly.
That is so simple, but so genius. And because it was just wood, the king didn't have to borrow gold from European bankers to finance the country.
Precisely. From King Henry II all the way down to Henry VIII, the state used these sticks to finance massive infrastructure projects. They built walls, ports, roads, magnificent cathedrals, completely free of debt and completely free of interest.
And the economic downstream effect of a government operating without a national debt is just staggering.
This is the part that I think everyone listening really needs to internalize.
Yeah.
Goodson cites records showing that a typical laborer in 15th century England only had to work 14 weeks out of the year to comfortably provide for his entire family. Think about your own schedule for a second. A medieval peasant had up to 180 holidays a year.
It's wild to think about. They had drastically more free time and economic security than the average modern professional today. And the only variable that changed is that their government wasn't paying compounding interest on its own money supply.
Right. The wealth of the nation actually stayed within the nation. It wasn't being constantly siphoned upward to service a national debt. But of course, this golden era of prosperity had a huge target on its back.
So how does a system that's successful actually get dismantled?
Internal subversion and foreign financing. In the 17th century, Oliver Cromwell allows the usurers, who had been banned from England for centuries, by the way, back into the country.
Wow.
This financial influence eventually ferments what history books call the Glorious Revolution of 1688, though Goodson argues it should be remembered as the infamous revolution.
Because the revolution was essentially bankrolled by a private syndicate in Amsterdam.
Mm-hmm.
They finance William of Orange, he takes the English throne, and it's time to pay the piper.
And the payment they demand alters the course of human history. In 1694, William surrenders the sovereign right of the English government to issue its own debt-free money, and he agrees to charter a private corporation, the Bank of England.
And There is a quote in the book from William Patterson, the actual founder of the Bank of England, that is so brazen it almost feels like a movie villain script.
Oh, I know the one.
He openly brags, and I'm quoting here, "The bank hath the benefit of interest on all monies which it creates out of nothing." Let's stop and break that down. How does a bank legally create money out of nothing?
It's the birth of the modern fractional reserve central banking system. Imagine the government needs £1,000,000. Instead of carving £1,000,000 worth of tally sticks for free, the government goes to the Bank of England. The bank doesn't actually have £1,000,000 of gold in its vaults.
Oh.
It just writes down £1,000,000 on a piece of paper, hands it to the government, and says, "You now owe us £1,000,000 plus 8% interest." The money was conjured into existence the moment the loan was signed.
It is a literal scam.
Yeah.
They invent the money out of thin air and then tax the working public to pay the interest on that thin air money forever.
Exactly.
And what does the government use that borrowed money for? Funding endless expansionist wars, which drives the national debt even higher, which triggers more borrowing and more interest payments to the bankers. It is a perpetual motion machine of debt slavery.
And if that's the financial engine of the British Empire, you have to ask what happens when their colonies start realizing they don't need the mother country's money?
The European banking virus crosses the Atlantic.
Right. The standard history we are all taught says the American Revolution was fought over the tea tax and, no taxation without representation.
But Goodson cites Benjamin Franklin directly contradicting that. Franklin explained that the American colonies were thriving beyond belief, specifically because they issued their own debt-free paper money, which they called colonial scrip.
Yeah.
They controlled their own purchasing power, they didn't borrow from England, and they paid no interest.
And the Bank of England's response was to lobby the British Parliament to pass the Currency Act, which outright banned colonial scrip. It forced the colonies to conduct all trade using British money borrowed at interest from English banks.
Just instantly choking the economy.
Exactly. Franklin explicitly wrote that this sudden contraction of the money supply caused massive unemployment and widespread poverty, and that the theft of their sovereign money was the primary trigger for the Revolutionary War.
Which sets off this brutal, century-long shadow war between U.S. presidents and the international banking cartel. You have Andrew Jackson, who famously wages war against the Second Bank of the United States.
Right.
He actually manages to pay off the entire national debt, literally the only time in American history that has ever happened. And he kills the central bank.
But the banking syndicate always regroups, which brings us to the Civil War and Abraham Lincoln.
Right. Lincoln needs to fund the Union Army, but the national treasury is just empty. The private New York and European bankers offer him loans, but they demand interest rates between 24 and 36%.
Which is complete extortion.
Total extortion. So Lincoln bypasses them completely. He prints $347 million of his own debt-free United States notes, the famous Greenbacks, to fund the war directly.
He saved the Union by stepping entirely outside the usury system. And according to Goodson, that economic defiance is the real reason he didn't survive his presidency.
Okay, this is where the book takes the gloves completely off. Goodson makes a massive assertion here. He claims John Wilkes Booth wasn't just some disgruntled rogue Confederate sympathizer acting alone.
The text asserts that Booth was an agent of the Rothschild banking dynasty.
Wow.
His real name was allegedly Botha, or Rothberg, and he was funded and directed to assassinate Lincoln specifically to stop the greenback debt-free system from becoming the permanent monetary policy of the United States.
Wait, holy shit. Are we genuinely saying that the assassination of Abraham Lincoln was a corporate hit ordered by a banking cartel?
That is what the book lays out?
Because he brings up President James A. Garfield, too.
Yes. Garfield took office in 1881 and issued a searing public statement. He said, "Whoever controls the volume of money in any country is absolute master of all industry and commerce." He explicitly called out the financial monopoly.
And then
2 weeks later, he was gunned down by a quote-unquote lone deranged assassin.
that is fucking insane. To claim that the highest office in the country was repeatedly, violently purged by financial institutions just to protect their monopoly on printing money.
Well, whether you fully accept the assassination claims or not, the historical trajectory Goodson maps out culminates in an absolute total victory for the bankers in 1913.
Right, the Federal Reserve.
Yeah. That is the year the Federal Reserve Act is passed in the dead of night. The United States government permanently hands over its sovereign right to print money to a consortium of privately owned banks.
And as soon as they have control, they immediately start engineering the economy. They pump the market full of cheap credit during the Roaring '20s. They get everyone leveraging themselves into massive debt. And then in 1929, they deliberately pull the plug to crash the system.
Goodson argues the Great Depression wasn't an accident. He says it was a mathematical certainty engineered from the very top.
How does that actually work mechanically? Like, how does a lever pulled in a boardroom wipe out the entire country?
Through the discount rate and margin loans, the Federal Reserve controls the discount rate, which is essentially the cost for regular banks to borrow money. In 1929, the Fed suddenly and drastically raised that rate, making credit incredibly expensive overnight.
Okay.
Simultaneously, Wall Street banks abruptly called in their broker loans. Back then, you could buy stocks on margin, meaning you put down 10% and the bank loaned you the other 90%.
Right, highly leveraged.
Highly. But the banks had a clause where they could demand full repayment at a moment's notice. When they called in those loans all at once, millions of investors had to panic sell their stocks to cover the debt. The market imploded instantly. Over 10,000 independent community banks were wiped out.
They contracted the money supply on purpose to bankrupt their competition and buy up real assets for pennies on the dollar. Congressman Louis McFadden actually stood on the floor of the House of Representatives and stated publicly that the Depression was a carefully contrived occurrence designed by international bankers to bring about a condition of despair so they could emerge as the rulers of us all.
So if the syndicate conquered America in 1913, their next logical target was the rest of the world. And this is where Goodson's analysis tackles the most sensitive and devastating global conflicts of the 20th century.
Let's start with Russia, because the economic reality of pre-revolutionary Russia completely contradicts the standard historical narrative we're given.
Completely. Before the Bolshevik Revolution, the State Bank of the Russian Empire was an incredible success story. It operated strictly as an instrument of the state, providing low-interest loans to local commerce and industry.
Yeah.
Goodson points out that under this state-run system, Russia had massive gold reserves, explosive industrial growth, virtually no inflation, and the absolute lowest levels of taxation in the developed world.
So how does a society that's stable collapse into a bloody communist revolution? Goodson argues that Wall Street and the international banking syndicate literally funded Leon Trotsky and the Bolsheviks.
Right.
They bankrolled the violent overthrow of the Tsar, specifically to crush the Russian state bank and drag Russia back under the umbrella of the global financial cartel.
That is the argument he lays out.
Okay.
And he extends this exact same financial lens into his analysis of World War II.
Okay, hold on. I have to push back here because this is a massive leap. Goodson is claiming that World War II, the most catastrophic, ideologically driven conflict in human history, wasn't primarily about fascism or territorial expansion or democracy. He's reducing the entire Second World War to a dispute over central banking.
I know.
How does he possibly justify ignoring the established historical consensus?
It is incredibly jarring to read. Goodson isn't denying that the battles happened or that the ideologies existed, but he is looking at the timeline strictly through a financial mechanism. He argues that those ideological narratives are the surface layer, while the underlying engine of the conflict was economic independence.
Okay, so what's his evidence?
According to the text, in the 1930s, Germany and Japan did the one thing the global financial elite cannot tolerate. They broke away from the international central banking system.
So what do they actually do economically?
Germany nationalized their central bank, the Reichsbank, and implemented Gottfried Feder's policy of the abolition of interest thraldom.
Wow, what a name.
Yeah. Instead of borrowing money from international banks to rebuild their ruined economy, the state issued its own debt-free money. But instead of backing it with scarce gold, they backed it with the actual labor and production of the nation.
So instead of borrowing gold from a private bank at 8% interest to build a highway, the government just prints the exact monetary value of the highway, pays the workers directly, and the newly built infrastructure itself acts as the backing for the currency.
Exactly. And the mathematical result of bypassing the usury system, according to Goodson, was that Germany went from 30% unemployment to zero unemployment in a matter of years.
Zero.
They experienced explosive, unprecedented economic growth with zero inflation, all while the United States and Britain were still starving in the depths of the Great Depression. Japan implemented a similar state bank policy in 1932 with the exact same miraculous economic turnaround.
And Goodson's claim is that this level of sovereign economic success was an existential threat to the global financial syndicate. If the rest of the world saw that you could have full employment and massive prosperity simply by printing your own debt-free money, the entire central banking cartel would collapse overnight.
That is the core of his World War II thesis. He argues the international banking cabal orchestrated the war specifically to obliterate these independent state-run economies and force every nation on Earth back under the thumb of private central banking, coordinated by the Bank for International Settlements in Basel, Switzerland.
The BIS, the Central Bank of Central Banks. An institution that operates in total secrecy, is literally immune from all national laws, pays no taxes, and dictates global monetary policy. Goodson is arguing that tens of millions of human beings were sent to the slaughterhouse simply to ensure that every country on the planet was chained to this debt-based fiat system.
Which forces us to look at our current reality. Has any nation successfully resisted this debt cartel in the modern era?
Goodson brings up two modern examples that show the stark contrast of what happens when you try. First, right here in the U.S., you have the Bank of North Dakota.
Oh, right.
It is literally the only state-owned bank in America. All the state's tax revenues are deposited there, and it creates credit to provide low-interest loans to local farmers, infrastructure, and small businesses.
And it works.
It totally works. What's the result? North Dakota consistently runs massive budget surpluses, and they weathered the 2008 financial crisis better than almost any other state.
Because the wealth generated by the people of North Dakota stays in North Dakota. It isn't bleeding out to Wall Street through compounding interest. But Goodson contrasts that quiet, peaceful success with a much darker, modern example on the global stage: Libya.
Under Muammar Gaddafi, Libya had a completely independent, state-run central bank. They issued their own sovereign money. They had zero inflation.
And they used that debt-free state money to fund the Great Man-Made River Project. It was a $25 billion engineering marvel that brought fresh water from beneath the Sahara to the coastal cities, transforming the desert, and they built the entire thing without taking a single dollar in foreign loans from the IMF or the World Bank.
Goodson argues that NATO didn't bomb Libya in 2011 to protect human rights. He claims NATO destroyed the country specifically to act as the militant arm of the central banking cartel.
Right.
Because Gaddafi was in the final stages of establishing a gold-backed Pan-African currency, the gold dinar, that would have allowed the entire African continent to bypass the U.S. dollar and the European central banks entirely. They killed him to protect the monopoly.
This relentless historical cycle brings Goodson to his ultimate grim warning for the future. He argues that this global system of usury is currently driving Western civilization toward a total demographic collapse.
This part hit incredibly close to home. Think about your mortgage or your rent. Because our entire money supply is created out of debt, the systemic cost of living has skyrocketed to a point where a single income can no longer support a family.
Yeah.
The interest payments baked into the cost of housing and goods are so massive that both parents are now structurally forced into the workforce just to service the compounding debt created by the banks out of nothing.
When you take out a 30-year mortgage, by the time you pay it off, the compounding interest means you have often paid double the actual value of the house. That is massive wealth extraction. Goodson links this economic suffocation directly to the plummeting fertility rates across the developed world.
People literally can't afford to live.
Exactly. People are looking at their financial reality and realizing they cannot afford to have children. By structurally forcing populations to prioritize endless debt service over family formation, he warns that usury will literally cause the slow demographic extinction of our civilization.
We are working ourselves into extinction just to pay back imaginary money that was printed out of thin air.
It is incredibly bleak. But if we project Goodson's premise into the immediate future, there is a lingering thought that is even more unsettling than demographic collapse.
What's worse than demographic collapse?
Well, for centuries, this overarching struggle has been about bankers forcing humanity to use their physical paper money, or their silver, or their gold. It was a physical system of control. But consider what happens as we transition into a completely cashless society.
Central bank digital currencies. CBDCs.
Exactly. If money is no longer even a physical object you can hold or hide, but simply a programmable line of code controlled by these exact same unaccountable central banks.
Oh, wow.
The ultimate enslavement Goodson warns about wouldn't even require the burden of debt anymore.
Because if every transaction is tracked and controlled by a central ledger and you step out of line, they don't have to send the police to foreclose on your house. They don't have to orchestrate a war. They can just flick a switch on a keyboard, turn off your digital wallet, and instantly delete your ability to participate in human society.